Ladies and gentlemen, welcome to the Fintech Friday show. With me, I have the great and powerful Roy Crossroads and the one and only Tevis, the Fun of Investing podcast. How you doing?
Good. Been a busy, frantic week. A lot of all-time highs. It's fun.
Yes, sir.
How are you
A
guys?
lot of all-time highs. That feels good, eh?
Oh, yeah. I never hate seeing my portfolio at an all-time high. So, and also on a lot of tickers that, I'm sure that a lot of people in the audience too have seen a lot of those over the last few weeks. There's still names that are undervalued that are performing sluggishly, but man, there's a lot of them that the market appreciates right now.
And Tevis, how's work going for you? What projects are you working on? What are your clients' names?
Work going good, man. Market's fun. It's a crazy market, honestly. It's just, it's crazy out there. Lots to talk about, I think, tonight. We're going into an earnings season. A whole bunch of names are going to be reporting. Roy and I were talking a couple of days ago around how we're staying nimble on the cash positions.
Yeah.
Make sure we can capitalize on some potential dips, but I don't know.
What are you guys keeping for cash right now?
I'm about 10% cash.
10.
Yeah, it's like 8, but if there's time, and I think that there's time. I actually did a video today, saying, hey, is this a market top? And also what I'd be doing if it was. And I'm starting to do those things. De-risk, basically, remove leverage, short-term options, get out of some swing trades, take some profits on those. I haven't hedged or anything like that, but, money coming in, if not weekly, it's every other week. And I'm like, hey, I'll just, other than my DCA and Bitcoin, which is like no matter what, I've seen nothing where I have to buy more right now.
Yeah.
I have plenty of some things that are undervalued that I think will be doing well. And I'm comfortable waiting on a dip. So I'll let that slowly fill up, to 10%. It'll take a while, but I think that probably we're not at a local top. I expect that there's probably, another leg up. And then after that, maybe we'll look at that pullback.
Tevis, what percentage of cash are you in right now?
Like 25.
25?
Yeah, well, I use it to, I use a huge chunk of cash to, do the wheeling.
Wheeling and dealing? Okay.
25, maybe 30, honestly.
Bro, I'm at like 1.5% cash.
Well, yeah, I'm still making money off the cash. I just am not getting assigned on anything. And I'm writing pretty aggressively, man. I wrote HIM's $55 puts, which is it's $5 in the money. And it's a 25% return if I don't get hit on that at all. And I'm keeping it obviously fairly small positions if I'm going that much risk on. But yeah, I'm not really in a rush.
Josh says we have to cheer up. Sounds like we're in a bear market. No, I think everyone's just tired. It's been a long, stressful week. And by stressful, I mean busy. I don't actually mean stressful in terms of things to worry about. It's been, hitting all-time highs over and over. These are good feelings, but the timing of this show is not optimal. Being right at night, everyone's a little sleepy, and I've kind of been rotating my days. I used to be going to bed at 3. I've been going to bed at midnight lately. So I've kind of shifted my whole day over waking up earlier. So I'm more tired now.
Yeah.
I appreciate the back and forth. You guys are great. Thank you.
I can see why Josh is amped the hell up. He's 100% SoFi.
Yeah.
He's loving life right now.
What do you think his position size is right now? 7 million?
I think he posts it. Yeah, 6 or 7.
Yeah. It's congrats to you, by the way, Josh. People were hating on that and hating on SoFi for a long time, and we're not at all-time highs. We're at 52-week highs consistently. And I think that SoFi will probably continue to do that until we see a pullback, along with everything else. No telling, but it'll probably pull back then. But it's a matter of when, not if, SoFi puts in a all-time high. It may not come this year, although I'm thinking there's a decent chance, actually a really good chance.
Yeah, I mean, you're not that far off. What are you, like 30% off of an all-time high, something like that?
Well, what's actually funny is SoFi, I don't think has been higher than 2360 or something. But
POE, yeah.
IPOE was 28.
Yeah, that's right. I was like, no, it has been like, what are you? Yeah, you're right.
Yeah. But SoFi
yeah.
itself, actually, we're really close to hitting an all-time high.
Yeah, a lot of the Chamath SPACs did the same thing where, it just put in highs or all-time highs before or just shortly after, and then
there was
were
a
destroyed.
good period where the tickers were available and they knew that they were going to go like A, B, C, D, E, F, G, and you were able to buy them before there was a name assigned to them,
which is crazy.
Do you remember that? Like the hype that people were buying them, and it was almost like lottery tickets.
I was, I was newer to individual investing at that point, and I just knew like this is weird and I don't like this, and I'm staying away.
You imagine pulling a ticket, you either get SoFi or Clove or OpenDoor, or didn't Ginkgo Bioworks come the same way? No.
ChargePoint.
Ginkgo, ChargePoint, Virgin what are those?
SPCE, yeah.
Those were tickets of the same. That is nuts to me.
Yeah.
Legitimately out of that list. Like, I think SoFi, if we didn't name.
Well, OpenDoor's been on a run, but if you zoom out a little bit, it's
down
like 80% or something still.
And it's like what I've looked into it is briefly because Carvana is the caution and the pause, like that's a business that turned around, and I don't think it's as strong as you would look at the ticker for, and it's very extended, but it's not a trash business. OpenDoor, I have personal experience with that business. I thought it was low tier and low quality when my wife and I were looking at it and looking at homes down here in Houston, to the point where we told our realtor, we said, hey, unless you're like, hey, this is a dream home, we're not looking at OpenDoor houses anymore, period. Like they were such low quality and so terrible. Now, it was easy to get in and see them, but that was the only feature that we really liked. And then like there's all sorts of weird stuff in the C-suite. They didn't appreciate the market, and that was fine. That does happen. But I don't know. This is not a business like you look at their balance sheet, you look at their debt, you look at a lot of issues that they have. You can trade it, you can make some money. I wouldn't want to be married to this business. I think that would be a terrible mistake. And when we have a pullback, like Open can go higher. People can make money, and if people are, that's great. But man, I could not sleep holding that in my portfolio.
I was even saying, I think I'd prefer much more to hold like Rocket Company or something like this that has a much less asset light business, but still benefit off rate cuts and still benefit off the home market, if that's the way you want to play it.
Well, they don't really benefit off of rate cuts. Now, the tickers might, because the market is not efficient.
The 10-year, is that what you mean?
Yeah, exactly. So, for those that are uninitiated, and I need to pull. Well, I can pull up the post if we want to go that direction. We probably don't but real quick, it's Fed fund rate is what Jerome Powell controls, and that is basically the borrowing rate for banks. That does inform some other aspects in our economy, but the 10-year treasury yield is actually what informs the 30-year mortgage rate. In essence, they look at the 10-year as a guaranteed rate, and so those that are doing mortgage-backed securities are like, okay, great. We need to make at least that. And then they have a cut as well called the secondary mortgage market. Now, that does fluctuate based on several conditions. A lot of it is macroeconomic certainty. And, if the consumer seems healthy and good, then that secondary mortgage market, that split between what the 10-year is and what the 30-year is tends to get small. It's pretty wide right now. But historically, Fed's funds rate has very, very, very little impact on the actual 30-year mortgage. And the crazy thing is the guy that's in charge of that in the United States government, in the cabinet, doesn't seem to understand it. I'm guessing he probably does, but for some reason he's pushing the rate cut agenda. I think they should cut rates too, but it's not to save or re-energize the mortgage market, and it will not. Although the ticker may fly high just because the market is not efficient. But yeah, to your point, Rocket.
Really quickly, Love Madonuts says, I appreciate what you guys do. Thoughts on SoFi next earnings? Currently sitting with 15K cash on the fence of what to do. Today is not the earnings predictions, but obviously we can give some thoughts on maybe what is to happen.
I can recommend what they could do. You could just do that, super chat right there. I'm just kidding. Don't do that.
Recommend.
Don't do that, please. I would be very upset with you. So yeah.
Yeah, because you gave 30 of it to YouTube.
Yeah, and I'm short Google. I'm not really, but yeah, no. If you guys want to play, the mortgage market, like there is a company. I'm not sure if you guys have heard of it. It used to be called Wyndham, and it got acquired by a company. Used to be a SPAC of some sort. Not
IPOE, right?
SoFi. So that could do well too, in the event of rate cuts and the perception that will galvanize the housing market, even though it won't.
The idea, which is so funny, is that like SoFi is a student loan company, but they used to be they used to be a student loan company. Now they're a personal loan company. But the end game is that they're a home loan company. Like it is the largest market, the most profitable type of loan. Like that is where we're headed. But along the way, we're finding out how to underwrite in loans that also have large markets and they can expand in areas that are not as that have as strong of competition. But overall, the big areas of finance is credit cards and home loans, and SoFi is actually pretty nascent in those markets right now. So the growth just in lending is can head a lot higher. And by the way, we are only in US markets right now. This is another thing that Anthony Noda has been talking about is international expansion. It's the big talk in fintech right now. And SoFi is not going to be completely out of that. They've talked about Latin America and different places like that. So who knows what they're going to do?
Yeah, I mean, there's a lot of growth ahead. And, to your point, well, so quick shout out. If you guys have not already seen it, watch Tanner's interview with Devin Ryan. He's an amazing analyst. He's probably the best fintech analyst. If you're in SoFi, if you're in Robinhood, if you're in Coinbase, you'll want to see that. You'll want to see it anyway because Tanner's there. But one of the things that he said about SoFi, and I know people are upset that he didn't move the price target. He talks about that. I'm not going to spoil that, but he talks about, and this is actually what I find most compelling with SoFi right now is not that this leg of the business gets regalvanized, and they can basically use a balance sheet to lend against it. Even more interesting is what they're doing with the loan platform business, and having a capital light growth vector is significant for the market and its perception.
Yeah.
So loan platform business, man, that is SoFi right there. Now
the loan platform business is so freaking exciting. And someone asked me if SoFi can have a hood level event where they go from 20 up to 60 plus, like that sort of tripling. I'm like, if there is going to be some way, it has to be a massive explosion in the loan platform business or some sort of Galileo product. Like I'm not going to rule it out, but they have to execute at a much faster level than they have previously. Is it actually possible? Yes, but you need to move quick, and Robinhood's been able to move quick.
Yeah, that right there. There was, anytime a ticker runs really hard, people throw out, some pretty aggressive price targets, just thinking it's going to keep doing that or comparing it with others.
Yeah.
But that's exactly to your point. And what would galvanize that is rate cuts that are very aggressive. I don't think that we'll get that before Powell is out, and he's not going to be out before May. Trump is not going to fire him, even if that story flips between now and then. But Trump has 2 chairs to appoint, assuming once Powell is no longer chair that he resigns. That's traditional, so I'd expect that. And likely he'll control, because usually the one that you're appointing is going to be the one that you appoint also to the Federal Reserve as chair. That doesn't mean that Trump is going to get interest rates down to 2%. But if there was a scenario where rate cuts came a lot more aggressively, that's freaking amazing for SoFi and also other lenders as well. And that's when you can see that explosive growth in the company, but also the stock, because unlike before, they had the loan platform business, they could only loan against their balance sheet. And so at a certain point, they're like, well, we're capital constrained. We can't do much more. So you become very selective. Instead, they have all these other people that are out there that are like, hey, we would love access to some of this as well. And there's so many more things they could spin off of the loan platform business. So if we get an environment where rate cuts fall appreciably, that not only helps their balance sheet, it also helps future loans for themselves. But that loan platform business can just get silly and stupid. We're going to see a very high year-over-year comp as far as revenue growth. I don't know that it gets to 40%, but it was a very weak quarter to the previous year. but we could see stupid year-over-year growth numbers in that scenario. Now, I'm not saying that's a likely scenario. I'm not predicting it. I'm not banking on it. But that's when you can see people thinking, oh, SoFi, it's like it's going to be the biggest and best fintech again, solely because of the price action and what they were doing with the loan platform business. So
Yeah.
all that to say, I'm not selling SoFi. I'm not taking gains here. If we get another big pullback, I might even add.
Tevis, your thoughts on the potential for accelerated growth?
Yeah, I mean, I think Roy nailed it. It's going to be on the back of the loan platform business. That's the thing that they've been mentioning in Fireside Chats that is going to accelerate for them, that we're just at the beginning. And I mean, look, they're putting up triple-digit growth rates for that segment of the business. And it's going to be really exciting as well from a risk perspective, because all of a sudden, now they're not taking as much risk themselves and they can scale in a much more seamless way. And I think that's going to be well received by the market. Of course, the tech platform is going to drag them back, but we know this to be the case, and management has guided that in 26 and beyond, the tech platform is going to continue their acceleration after the hiccups because the revenue is a little bit delayed. But the story for SoFi has largely changed from this AWS to fintech to the loan platform business, offering fee-based, risk-free originations on behalf of others, and then securitizing those originations. Like, it's just a much cleaner business model in general, and I think that they're going to lean into that. I don't even understand why they would still choose to originate on behalf of themselves in the future, why they wouldn't just purely go through the loan platform business entirely. Probably better margins, but like, why take on that headache when you can just scale so much faster? But I'm hoping we'll hear a little bit more about that specifically.
Yeah, what do they do? The only thing that I thought of whenever Anthony Noto said they are contemplating bringing the entire business over to the loan platform business, does that kind of take away at their need to have a bank? And like, what do you do with all those deposits at that point? Is that just like an 8 cost? Like, how do you look at that?
Yeah, I don't think it makes. I don't know. I like them being a bank. I think that there's some things, especially given the current. Thank you, Nihar, by the way. Being a bank that differentiates them, especially in the current environment where a lot of regulations like CFPB 1033 are being deprecated. So having a bank license, I think maybe in a year and a half, will no longer feel like a liability, but actually an asset. And you're actually seeing things like Circle apply for a banking charter, a banking license. Even if you're very capital light, it still makes a lot of sense to me. And honestly, like, I don't think they'll ever get to a point where they go 100% on a loan platform business, but they could do like 90%, 95%, and then be very selective and find those types of loans and also those specific customers as well that are most attractive for them to be on the loan books. As time continues, especially since the loan platform business is on financial services, lending is going to get smaller and smaller. And it sounds like, based on recent interviews, that's something that perhaps that they will push as a narrative as well, that SoFi is less dependent on lending. Technically, it's their own lending, but yes.
It is crazy to think that that's where we're headed, is that like, back whenever financial services made up for $25 million a quarter in revenue, or even like a year, and now it does like 300 million, or even more. The growth rate, everyone knew, and the bulls were screaming at the top of their lungs, like, no, stop just worrying about lending. Financial services will catch up. This is just a matter of time. There could come a time where the loan platform business is not doing $1.5–2 billion a quarter of originations, but actually closer to probably $15 or $20 billion of originations a quarter. Like, what does a bank look like that's originating $80 billion a year just for other partners, maybe taking on an additional 20 for themselves, something like this? Like, this is where we're headed if they can continue to underwrite better. But I don't see how that gets worse if you're underwriting at more, like, you only learn from underwriting.
Yeah, that's a cool thing. It's just flywheel effect, network effect at that point. And it, to your point, Chris LaPointe mentioned in that Fireside Chat month and a half ago that they were aiming for $1 billion in revenue from the loan platform business, and they were well on their way.
Yeah,
man.
That's what I like, though. You know, Hood talks about 10 different streams of revenue that make that are 9-figure businesses. SoFi comes out and says, "Oh, you know, we're actually building this 10-figure business."
Yeah,
And
that's
you know,
awesome.
Hood will find those too, but SoFi landed a really big fish, and Wall Street didn't see it for the beginning point. Now they're starting to, but that's you know, page on their investor relations that shows the mix of revenue as time has gone on is only going to go more and more in favor of fee-based revenue, which, like Devin Ryan said in the interview, is just pure valuation multiple expansion. You know, so I'm bullish.
Really? I didn't know.
Yeah. Yeah. Let's quickly, unless Tevis or Roy, if you have anything else to add on that, let's quickly switch the topic.
I'll just say it's just one caution with where the market's at and where SoFi is at. You know, most of these people, most of our folks here have been buying SoFi and bought at much lower levels. It's not wrong to add, especially to winners. Just make sure you're not doing it because of FOMO or euphoria or anything. Just make sure you know what you're willing to lose. There could be still some pain ahead. I think there's a lot of upside too, but there's going to be pullbacks along the way. So just manage your risk to what's comfortable. Don't trade based on emotion.
And you want pullbacks along the way, right? Like you want a sustainable growth upward. I know a little bit of the market is maybe spoiled with some of these names that are only up all the time forever. But at the same time, like you want to be able to have new layers of investors discovering the company, investing in the company, and having a chance to build a base higher with the company. You don't want to have like these huge violent spikes that are unsustainable and then it goes down. Like it's just an emotional roller coaster that way. And I think that, you know, we got a 2x in the underlying from last earnings to this earnings. And largely that was because the company hadn't really done any big accumulation, any big moves, right? We got a 2x in the company again in the course of a month or 2 months in October, November, where it went from, you know, $7 to $14. And so I don't know if I would prefer that. Like I would prefer us to gradually climb on the back of the fundamentals improving for the business and the prospects for growth improving. I don't necessarily know that I want to, you know, have a company do nothing for a year and then randomly a month it just doubles and then it continues to do nothing for a year and then it doubles again. Like, yes, it's going to look good like that, but I don't know. So I would say if it pulls back, like it's all, you know, programmed in basically.
Yeah, I mean, there will be healthy pullbacks. I just hope that we don't end up, you know, getting back into single digits. Not because I wouldn't accumulate more, but I think that it sucks for the average retail investor that worries about what they're holding or might have shorter time horizons or something like this, and they're forced out of the investment whenever, you know. SoFi is a weird company, right? There's high short interest, but a weirdly linear growing business on the other end. Like every single stat is looking very strong, and I don't know.
Yeah, it's that still puzzles me a lot, and I'll be very curious. You know, when we saw the previous read, it is always a delayed indicator, but SoFi had made a pretty good move up. I think it was at 17 when that spike in short interest was actually seen. And you look at, like, I understand HIMS, like the short interest is too high, it's crazy, but at least there's like a legitimate bear argument. With SoFi, I think it was like we don't like the way that they report their lending.
Yeah,
and maybe it's untested when recession comes, but no one's talking about recession. So it's not even hit and impacted by tariffs. I mean, like, what are you talking about?
yeah. I heard so many people say that it's a fraudulent business and all this stuff. And then you're like, okay, well, they're regulated by the Fed and the SEC, and even fair value accounting is something that regulators don't prefer, but yet they don't make it illegal or don't, like, it's clearly allowed. SoFi's following every single rule. They're doing everything right. And they have more loan buyers every quarter. Like, I don't know. If their loans suck so bad and fair value accounting was so terrible, Why did Fortress come back for another $2 billion of loans? Why does BlackRock sign more securitizations with them? Like, by the way, getting in bed with BlackRock was brush past because that deal was $250 million. But like, you talk about partnerships that you need to scale endlessly. That is one of them. Holy.
Yeah, they have infinite money glitch right there. Yeah, the one thing that I'm thinking, as far as SoFi is, I'm guessing that there are some that short just a whole basket of X SPACs. And honestly, if they did that back in 2022 and all the way through now, they probably just printed money. And so at this point, maybe they just don't care. They're like, hey, all SPACs are equal. Let's just short them all by a certain amount, and some will be winners, some won't. Sometimes they'll lose, but I don't know. Like, at some point, that SPAC tank really needs to fade. That may be for SoFi when they get in the S&P 500, which that'll be, maybe a couple of years from now. But
hold on.
A couple quarters before Hood.
Do you think that they get in before Hood?
No, I mean, no, they should not.
I'm not talking about should. I'm not talking about should. If Hood has not got in, they're getting in before Block. I wonder. Someone said this could be a political issue, and I wonder if it is.
Yeah, it could be. We don't know who is on the board. I actually just went through their it's not prospectus, that's the wrong word, but basically the documents, the governance documents. And yeah, there's nothing in there that precludes Hood at all, or AppLovin, or even IBKR. It's weird though, seeing Block in there. Block is deserving. It's probably, in my mind, a top 10 deserving company that should have gotten in the S&P 500, but I don't know. I feel like they overlooked a lot of really good companies, including Robinhood. Maybe they just want to buy it 150. That could be it.
Another interesting part that could be is that other people suggest is that they just hate volatility so much.
No.
Okay. But maybe that's the case. Maybe that's why they haven't taken on IBKR and stuff like this. But SoFi wouldn't fall into that list.
It's not volatility though. I mean, they took in Palantir in the 40s. It's not over.
No, I mean business volatility, cyclicality.
Yeah, Palantir is about as predictable and stable as you could get. So
right. So Coinbase they just added, which would take away all the volatility concerns because it's crypto.
Yeah. I was going to say, wasn't there one that just got, yeah. And Block is honestly not as stable as you typically would expect for the business type that they have either. So,
yeah, I know. And if you're looking for a good business, it's hard to think of them, but, which is so funny because I was so bullish on, but this is how you know that I do not marry stocks. Block was good until it wasn't. And then you get off that train. And then they join the S&P 500, and then you wish you were on that train. No.
Honestly, you'd still be down if you were.
Yeah.
You got out at 90 something. I fell all the way to 40,
so.
Which even that's the thing is, I didn't want to put money. Well, I have Block technically, but I didn't want to put more money on Block. But when it was in its 40s, I'm like, okay, this is stupid. It's not a company I think is amazing with the current leadership. But the market should not have smacked it ever down that far. That was ridiculous. Now I don't think it's even expensive necessarily. I just think they'll tend to underperform rather. And previously, this was actually my thought when I saw the news. My second thought. My first was Robinhood. Come on. But after that, it was my previous hedge against the downturn in the market, which paid off really well, and I sold way too early. Was buying puts on Block. I don't have a hedge right now. As we continue to leg up and I see more and more indicators showing that we're near a local top, I'll put some form of hedging there. There's a lot of different ways I can go. Block might be attractive at that point. It wasn't when it was in the 70s. Even here in the 80s, I wouldn't. I would wait for it to ride up more, but we might get that. So we'll see. Block might make me a lot of money.
Someone said I do marry stocks. Roy, I'm going to question you. I think I have married one stock. Which company do you think that is?
At this point or in the past?
Well, it's been the same one for a long time. I mean, I've married this company.
Oh, NVIDIA.
I would not say so.
Shopify.
Shopify, baby. Shopify will be in my retirement fund. I'm saying that now. Nvidia is the best company I could have bought right now, but I'll sell if things go wrong. Shopify, I literally don't think anything will change my mind.
Is that partly because it's Canadian?
No, not at all. It's zero. That's the bearish side.
So it's not Adobe?
No, it's just that I don't see. I see e-commerce being a thing for the rest of eternity.
Yeah.
Like commerce in general. I see them being in every single vertical of commerce, and they're winning. They've got a winning formula.
Nihar is saying you're basically doing a Coldplay thing with
Yeah,
with Nvidia right now. If you're saying you're married to Shopify,
I did that today. Did you guys see that?
yes. Oh, that was great. Pull that up, Tevis.
Sure.
Someone in chat, in one of your chats, like Tevis's or something, is saying that we get paid by SoFi to come on here and talk. Guys,
I would love that.
He doesn't even come on the show. They're not even allowed to talk to us. You think they're going to send us money? Are you kidding?
Yeah, this is proof that we don't get paid by SoFi. If you look at this very unbiased type of post.
Yeah, appreciate you supporting the claim, Tevis. SoFi has done really well, but honestly, they freaking hate this channel. Like we get invited to absolutely nothing.
Yeah.
They've made these tweets saying that they are not happy with what retail is saying about certain things and defaming, or is it defaming?
No, definitely not defaming, or else you'd have a lawsuit. But
talking bad about the team and the engineers, that like they've said a bunch of stuff about stuff that they don't like about us.
They've fully told people internally to not talk to us, or repercussions inside the company. Yeah, they're not fans of the show, and that's fine.
Probably because I'm on it. I've said some mean things about the CTO and the tech platform. So
definitely you. Definitely. I think I might still be on the possible list. You might be off the list.
Yeah. Oh, yeah. There's no way, and I'm fine with that. Like SoFi's not. I like SoFi a lot. It's my main bank. Maybe I should rethink that if they hate me, but not really.
No.
But it's not a stock I'm married to. Like the only one that I'm actually married to is Palantir.
There you go. I like that. That's some patriotism, a little bit.
Yeah.
But going on, we have some more SoFi news. So let's jump over to that. This is a paid sponsor by. No, I'm kidding. But do you guys know what partnership I might be alluding to here? That's
the Paychex thing.
Paychex, ladies and gentlemen. They ended up tweeting out that SoFi is now getting in bed with the massive Paychex company. This is going to be to bring SoFi at Work online with Paychex, massive brand, to help with the businesses that they are helping with payroll and HR and all of these things, to potentially offer the customers of those businesses personal loans, student loans, emergency funds, SoFi Invest, all of the extra tools in between. What were your guys' original thoughts whenever you saw this? Is this big news or is this unbelievably huge news?
Neither.
How is it not?
I just don't see it being that. I mean, it's one of those incremental. It's bigger than some of the things that they've released, but it's an incremental ad. Makes what they're offering a little bit more attractive. Now, this partnership can get further developed.
Brings like how much money do you think it brings per year?
To SoFi at Work?
Yeah, no, to SoFi's entire brand.
I would say maybe millions, but not. I wouldn't say tens of millions.
How many millions? Like SoFi Invest's entire business brings millions to SoFi.
We've done this time and again though, and I think it's relevant to have this conversation right after why management that are not fans. It's like we on the show are somewhat liable to hyperbole with regards to news and making it seem like, oh my gosh, this is going to be groundbreaking. Like it's 95 to 90.
What example are you thinking of? Think of an example.
Dude, we've had so many,
private equity
announcements, SoFi at work plus Chipotle. It's like, dude, who cares?
Yeah.
So like I think a vast majority, 9 out of 10 announcements are just, building blocks that support the thesis that this is a growing company.
How many employees are there at Chipotle?
Dude, how do you expect me to know that off the top of my head?
No, I'm just saying.
Let me just say this, Tanner. Until very recently, my middle son worked for Chipotle. He was very vaguely, he was aware of SoFi because of a college class he took, and the professor called it out and said it was great. Unlike Dave Ramsey, which maybe we'll talk about a little bit later. But as far as Chipotle, like he would have been, he probably wouldn't even have recognized it and seen that in the documents and everything, other than just like, oh yeah, SoFi, my dad uses that bank. I have this. That wasn't as big of a deal as it seems. Now this can become a big deal because this partnership can develop further. But where it is right now, it's just like, oh yeah, nice.
Maybe I get excitable, but
so
Chipotle has 130,000 people that they could potentially offer benefits to that are student loans and everything like this. So SoFi doesn't break down their personal loans, student loans, and everything by how they onboarded those products.
Yeah, and I did like that they said, and I pulled it up here, Paychex Flex Perks has already seen over 230,000 employees purchase at least one benefit. But I mean, like, I don't think it's massive, any more so than the Chipotle thing. To use a metaphor,
you don't think it's bigger than the Chipotle deal?
It's bigger, yes, but that was
it's like 100 times bigger.
Yeah, and I'm not saying it's not. I'm just saying it's not hugely significant. So I see this in the same way as basically PayPal saying, "Hey, we've rolled out PayUSD on Arbitum and Stellar Lumens." It's like, cool, good. I'm glad you guys did it. Doesn't really. I mean, it's an incremental ad. It's a small.
It's not
thing.
even remotely the same. This is like PayPal rolling out to Singapore.
No,
it is, bro. It's like if you take SoFi's entire business, okay, you're looking at personal loans, student loans, everything like that. That's how they make all their money. And then you expand that to 12 million more potential customers. That increases brand awareness and lowers customer acquisition cost.
Sure. Yes. I agree that that's the bigger piece here is the brand awareness piece. But like, that's the most difficult piece to quantify.
Yeah, but
like there's no guarantee that
like what Roy said, hundreds of thousands of people that are taking the benefits from Paychex. This is one of the largest customers in this game, and there's not another partnership that they have for personal loans, student loans, everything. This is like the only financial one, other than a budgeting tool.
I don't know that it'll do anything as far as brand awareness, not significantly. They're very good at that already. So perhaps there will be a little bit of recognition there, but it's I don't think that's significant. I think where it goes could be very interesting, but where it's at right now,
they have 130,000 employees. Tanner,
Chipotle does.
Okay.
Paychex has 12.4 million people that use their service.
Right.
740,000 small and mid-sized businesses.
Yeah. 1 in 11 U.S. private workers get paid through Paychex. 1 in 11. People in this chat are getting paid by Paychex. So that doesn't mean that they are going to get offered SoFi products. Paychex is going to offer the 740,000 businesses to say, hey, would you like to offer this? And SoFi is going to pay Paychex a referral fee for doing so. So Paychex is going to want to put this in their face because that's going to be a new revenue stream for them.
How many current partnerships do they have as far as products that they offer outside of SoFi?
1,200 businesses. We just expanded it to another potential 800,000.
Say that again.
SoFi at Work works with 1,200 businesses.
Yeah, no, I was like, I think you're answering a different question. So what I'm asking is Paychex, the flex perks. So they offer this suite of perks.
No idea.
Yeah, I haven't looked that up either.
It's not a large. It's not a large attach rate because
Yeah.
out of 12 million, we've seen 200,000 products taken.
And
But
that's
they're
what I was
not
going to say.
taking. They're not taking the products that SoFi's offering.
Yeah.
Like this is a new product, so I think it'll be one that actually has a large take rate because since Secure 2.0, now employees can match student loans for their members. That wasn't available like a year and a bit ago. So I think people are actually are not giving this enough credit. And it's not like they're going to come out on quarters and say, oh, look how well, Paychex is doing. But member growth is just going to pick up because that's what SoFi at Work does, is it just brings on new members. Like SoFi at Work itself is not bringing in new money. It's bringing it to customers to personal loans, to student loans, right? So whenever you see SoFi at Works, I think they have like 85,000 products outstanding or something like that. That's not 85,000 relay accounts. That's 85,000 student and personal loans. Like they're big products. So I'm a big fan of this Paychex thing. I thought that this was a big deal. But I think the Chipotle deal is big too. Like SoFi brand awareness. Come on.
It's incremental. But yeah, for brand awareness, like honestly, like you don't, when you onboard to a company like Chipotle, and maybe once a year you'll see and be reminded of certain benefits. It's overwhelming and there's so many things thrown at you. You will not, like, it does almost nothing for brand awareness.
Yeah, but we just expanded to 120 Chipotles.
So do you think, I'm just curious now that we're talking about the numbers, do you think this is bigger or smaller than the TGL news?
Smaller.
Why? Paychex has 12 million, like how much does TGL reach?
Yeah, but TGL reaches like hundreds of millions on TV. Like I think
hundreds of millions watching TGL on TV, like the hard,
like all the clips, all that. Like I think the name is just way more apparent. But also that's a direct cost to SoFi. I think that this TGL thing will be like they'll pay a lead generation, but they're only going to pay out if the conversion's guaranteed.
Right. Well, I mean, from a brand awareness perspective, right? Like it's all baked into the customer acquisition cost.
Yeah. I mean, I think the TGL thing is bigger because some brands are going to be selective. Not all of them are going to choose SoFi, but there will be conversions here. I like these types of deals. I think the more that you work like this, like the faster the partnerships are going to roll in. I think it only just matures SoFi as a business. So overall, I'm happy.
My point that I'm trying to make is like it's baked into the forecasts and the guidance that they're providing, and I'm not sure whether like they have a strong hunch that they're going to close Paychex when they're providing that guidance, or they know that they're going to close somebody of that magnitude is going to come down the line that's in their funnel right now. But it's not going to do something like it's not something that's unexpected that they're going to adjust their guidance upward as a result of it. Like all of this stuff is baked in. So that's why I'm like, it's not that really like a crazy thing.
Yeah, and I'm not finding that suite of products. I just looked at it. It is a publicly traded company. So that is something to keep an eye on. And if you're in quarter,
they're a huge company. They're a $60 billion company.
Yeah, I didn't know if they're publicly traded or not though. So, but yeah, makes sense. But you might actually hear about that, or at least more details of it too in earnings calls. So it's something to keep an eye on. Yeah,
really quickly, I just want to take a second here. Josh, thank you for the donations. Really do appreciate it. SoFi Vegas trip around NFL playoffs, Super Bowl. Who's in? I mean, if you're going to do a SoFi trip, you're not going to go to the SoFi Stadium? Come on now.
Well, I mean, you could for the World Cup, right? That could be fun.
David asks if I own any Prime or Abcelera. I actually do own Abcelera.
Oh, because it's Canadian?
No, dude, I didn't even know that. I know nothing about the business.
British Columbia.
Whenever people
Interrupt.
donate, I buy the stocks that they tell me to purchase. And so now we have a community fund. And dude, it's everything you would know that I never would touch. It's like all quantum. I've got Joby. I own all these companies now. I own you know what the number one position in the portfolio is? It's not it's not SoFi. Here, wait, I'll show you here. We track it in live time.
Well,
I'd
you
love
should
it to be Palantir, but
thank your viewers for Joby. They really did their due diligence on that one.
Yeah, bro. Also, I told you I was going to scold you here. Do you know how much that company's up year to date?
I know. Roy and I covered it in the bootleg. Don't worry.
It's up like 130%.
it's already covered. Don't worry about it.
Eric, thank you so much. Is dLocal on anyone's radar? I actually started looking back into dLocal. Obviously, they have some pretty stellar growth rates, probably the fastest in fintech right now. So I'm going to look back into dLocal, but payments is definitely a weird space right now. There's going to be a ton of movement.
Yeah, I don't personally like it where they're at as far as payments processing. They do a little bit more than that, but it is commoditized, especially as there's more and more players there. Now they have some good partnerships. PayPal actually announced a partnership with dLocal. Though nobody cared about that. For PayPal, just dLocal, I think it'll be okay. I just think that there's better opportunities. There's a lot of disruption potentially right now in pure payments. So especially when you're just a payments processor.
Look at this crap. I got SBET as my number one pick, and it had a unbelievable red day today.
Wow.
So the whole fund looks like it's getting killed. I'm down 7.9%. This is not fake money. I'm putting I had to buy $1,000 of SBET because I have a crazy viewer that donated $1,000 to put it into SBET.
Yeah.
And it's down 20%. That's after YouTube takes like 30%.
Yeah.
So, but yeah, I got Accelera. Chris Patel donated UNH here.
Yeah.
But yeah, we got all these names I would never touch, bro.
Yeah.
It's all healthcare stuff. I don't know why this is what retail does these days.
Cloudflare in there. Roy and I have been looking to get into that.
Yep. Mm-hmm. I'm also looking in. So if you guys want to do like a fun together bet, I will. Well,
it's actually interesting because somebody on our last live stream asked if we would do like similar to what Chris and Matt have on the Cash Flow Chronicles, where they basically have a portfolio similar to what you're doing for myself and Roy on picks that we just talk about on the show.
This is not what I'm doing, by the way. I have no control over the distributions of this fund.
No, sure. But yeah, we would have control if we were to do it.
Yeah, for sure.
I'm doing the worst.
Watch it outperform your portfolio. It's like, come on. But
honestly, I was like, guys, you know what we're going to do? We're going to make our own fund, and we're going to prove to the world that the future investing community, we are good investors. And it was just like, buy this healthcare company, buy this healthcare company. It was all, I'm like, guys, I never cover healthcare.
Yeah. Well, part of it is like, there's a lot of sectors that have done really well. Healthcare is not. Oscar has been killed off recently too. I bet you have some Oscar in your portfolio.
Of course I do.
UNH, of course. You probably have some HIMS, I'm guessing. HIMS gets out of life medicine. It's a tough sector right now.
When do you do these shows? I want to donate some stuff for you.
Yeah, it's every day at 8:30 Eastern Standard Time. And dude, Chris Patel gave me money to buy UNH like yesterday. So
nice.
That bumped up right to the top because he's big money bags, Chris. So
yeah,
and we just buy whatever fractional amount.
What he gave you, Grinder?
Yeah, it was like one of Amit's fans were like, "Oh, you got to get a Grinder for Amit." Stock market news gave me Honeywell.
Hey, Melly, that's nice.
Yeah, some nice people are in here. Some people gave me New, Shark Ninja, Hood. But we are going to test the limits of how many positions.
Oh, buddy, now that I know about this, I'm going to start donating stupid amounts of money for penny stocks for you.
I don't think.
No. Hold on. you have to check because there is some rules where the minimum market cap is 1 billion.
Okay.
And and no levered ETFs, no inverse ETFs. And the problem is whenever I thought about this, I was like, okay, so 30% is going to be taken off. So that's going to come from my own money. But as long as we get 30% per year, we'll be fine. Okay. And every position is not forever, it's for 12 months. Which even then I'm starting to get picks that people are like, hold this for a couple months. I'm like, that's not how this works.
Yeah.
So we'll see. But then I didn't factor in income tax. So I'm going to be down. I can't keep it going if it gets really large. Right now it's fine and it's fun.
I'm 100% going to donate $5,000 to Wells Fargo for you. You can just
hey, Tevis, I'll start a fund and I'll do the same thing if you want to donate $5,000 this way too. I know that's
I promise you it becomes not worth it, dude. It was fun at the start. Now it's well, I was telling him about it. He goes, I think I'm going to start it. And then he called me today and he goes, no way I'm doing this. I just am getting trash.
Yeah.
So holy crap. Guys, let's try to actually outperform the market, not just buy the retail stuff that Wall Street wants us to freaking pick apart.
It's kind of eye-opening too, like who is our audience based on their selections? Like they're a bunch of degens.
Everything's $5 billion market caps or less. I don't buy anything at this level.
Everybody wants to find the next whatever,
Yeah, and that's one of those signs of the local top. I think that'll continue to heat up as we get closer to that top, but who knows?
Who knows? There will be a couple winners in there, and then the people that found those will be geniuses. Look at Tevis and Roy for Hims, right? That was a small name. Now it's a huge name.
Dude, yeah. I look at Rocket Lab every day. I hope Matt's not in the chat. I look at Rocket Lab every day, and I'm like, God damn it, Tevis. Why did
yeah, we did a stock tank at $4 for that company.
Yeah. Well, and what is sad is for me is at 7, I'm like, I missed it. I at 4 and change, Matt had this post like, hey, you've not looked at Rocket Lab. Maybe it's time. And I said, okay. And that's all I said. But I messaged him. I said, I'm actually looking into it now. And it's pretty compelling. But I didn't do the invest and investigate. I instead investigated first. It had run from 4 to 7. I'm like, well, it'll probably pull back. Maybe I'll get it 5.5, 6. And I'll buy a decent position. It wouldn't have been massive, but a couple thousand shares. And they kept running. And I'm like, well, I guess I missed it. And that was like at 11 or 12. Didn't miss it.
Yeah.
So I'm frustrated at myself on that. Because I saw, it would have been one thing to have just not looked in it. It would have been another thing just to be like, hey, I didn't have funds available. But to see it at 7, have the hubris to think, oh, it'll pull back and not buy at least some there. And then think that I missed it at 11 or 12. I didn't think that I missed the whole thing. Don't think that. I just was like, hey, it's still going to be a while for profitability. And as they rev up this new engine, it's going to take some time. There are some headwinds in the sector as well. We don't know a lot as far as what the macro would be like at the time. I'm mad at myself. So big mistake.
I remember whenever Matt showed off Rocket Lab to a stock tank. I don't know if you remember this, Tevis, but I think we ended the call and I called you and I was like, bro, I'm not impressed at all. I was like, I don't know who this Peter Beck guy is, but he seems to just be burning through investors' cash, and he's using this as a pet project for him. I don't think he's a businessman. I think he's more like a wannabe astronaut. And then,
you know what my mental block is and was at that time and still is with Rocket Lab, and I hope Matt's not watching this. It's honestly scar tissue from Virgin Galactic. That thing, space tourism, blah blah blah, and it just crashed and burned. And I'm just like, oh man, space companies. I don't know if I want to get involved.
Yeah,
Curtis, thank you so much. I'll make sure to add Oscar. I love that name. Thank you.
I know when you actually like Oscar.
No,
you like the name, not the. Okay.
No, I know nothing about it, but it's called Oscar Health, so I don't like it.
I think it's okay-ish, but yeah, the name itself, yes.
Just start your channel at this point, dude.
What?
Just start a healthcare channel at this point.
Curtis could be right though. I mean, so far he's made a lot of good picks, but like,
Yeah.
I don't know. You can't know every name unless you're Jim Cramer.
Yeah, and I don't know. It's a weird space where for like 3 years I think Oscar will be decent, and then there's going to absolutely be political blowback. Like it's inevitable. So I don't know. If you guys are in it, just be careful. Is all I'm saying.
For this Christmas, are we doing the second part of the gift where like you gotta give one thing that you think is going to be best performing, and then you're also giving one thing that you think is going to be the worst performing?
What's the point of doing it again if the people don't even follow the rules?
Okay, Tanner, you didn't follow the rules.
I did. I followed the rules.
No, Roy, look at who is Roy pointing to?
What rule did I break? Tell me which one.
Giving your friends shit. Giving them cold.
Giving your friends a double?
You had no conviction in it.
I had tons of conviction. They are the next EV toll.
The rule is you have to own it to give it.
That's a new rule. That wasn't the rule back then.
But it was.
You guys added it because of my Joby actions.
We had said don't intentionally give cold. Now Steve will because he loves weird things and that happens. But you're not supposed to.
I hold Joby. It's in my portfolio
now because people gave it to you and they forced you to buy it.
So now I have like 60 names that I could give you guys.
Oh my god! No, we got to make a new rule, Roy.
Well, so whoever ends up winning, and hopefully it's not Joby, they write the rules basically. So you got to root on Hims. Maybe Lemonade can pull it out. Transmedics is actually doing well. Everybody but Steve's pick, and of course I'm the one that
I own that name too, by the way. Big Transmedics guy over here.
Okay, yeah. Shall we end with this little bit here?
What's that?
Oh, I need to actually share it as a tab though. It's the Dave Ramsey thing.
That guy's been shooting Sofi for years, dude.
Yeah, honestly, I don't really care to. He just said he thinks that banks that know your name and know you as a person are better banks, and that he said that people should bank at Fairwind Credit Union or something like this. I looked through that brand, and by the way, he was sponsored by the company.
Yeah.
I looked through. It's everything that you'd expect from that type of bank. Account fees, minimum minimum account balances. They have low rates in account like APYs, not as low as the JP Morgans. They had some accounts that had 2%, some that had 1%, but it's not SoFi level.
He did more than just that. Yeah, I know that he doesn't like banks outside of regional banks.
Dude.
He indicated that SoFi was like the second worst and second trashiest bank. He bagged on the naming rights of this stadium, and he had we don't do business with Wells Fargo, JP Morgan Chase, and God help you, the SoFis. Like it's not just I don't like banks in general. Go credit union. It's like SoFi sucks and I hate it and I think it's trash. Essentially,
you know when Dave Ramsey lost all credibility for me when he said this shit. Tanner, throw it up.
Oh, the $1 billion thing.
I don't borrow money, says Dave Ramsey, even if the offer is $1 billion at 0% interest for the next decade. It's like, well, yeah, then you're dumb.
Now, to his credit, that's part of his brand, and if he did do that, it would crush his brand. Even though it shouldn't, that's stupid because that's free money, literally. But
it's called intellectual honesty, man. Like you have to, if you're going to teach a subject, you have to teach the offense as well
as
the
nuances.
Yeah, like 0% interest. Like, hey, if you can accrue at some point, even if it is like treasuries or something like stupidly safe, like you're still making money off of that, borrowing money. But like standing by a principle, regardless, like I don't know, there are both sides of that coin, right?
Yeah, and Austin said
maybe he was just worried about negative interest rates.
Maybe. Austin said it perfectly though. He said Ramsey is how to get out of debt, not how to get wealthy. I mean, yeah.
I think that's a fair comment.
And
I've got nothing against Ramsey, but keep my name out your mouth.
Yeah, exactly. I was like, dude, like don't do SoFi that way. Like hate on Wells Fargo, sure, but like you're saying SoFi is worse than these big banks that pay nothing on yield that literally do treat you like a number. And I know SoFi's of the size where you don't have that local connection. You just don't. It's not physical branches other than over in California and a couple of places. But It's I don't know. He has helped a lot of people. If somebody's like in severe debt and they don't know how to get out of it, check out Dave Ramsey. Honestly,
Yeah, I've got nothing against Dave Ramsey, but he does stick to his things.
Yeah.
All right, ladies and gentlemen, in this show, we have a two-parter. It's not just this episode and then we wrap up and all go to bed. The night doesn't end for us. It might for you, but for us, we're going to go do the SoFi after hours show where it gets nice and dark and we talk about big tech and where Tevis is putting his millions and millions. Maybe it's another private jet. Maybe it's a hangar to store his private jets. We don't know. But if you want to join us there, you have to help fund that jet. A small piece of the jet fuel will allow Tevis to give you entry into that show.
Don't associate my name with your shitty biotech picks, okay? If you donate to Tanner, it's going to a biotech. If you donate to me, it's going to sports gambling. Like
I didn't talk about. I'm talking about to view the after hours costs. You have to become a member.
And to me, if you donate to me, it goes to my third Tesla. So,
do you know how many members are on the channel now? By the way, there's going to be so many people. I saw Dookie Pie giving you a bunch of freaking members.
Yeah, dude, Dookie Pie
she's gone crazy.
Well, yeah. Well, so people have to make a choice in life. Okay. Do they want to invest in your biotechs or do they want to invest in my UFC picks? And that's where we have a distinction in our donations. Also, before we hop off, can I make a selfish plug? Since you do it all the time with your interviews that are dropping soon, I started a TikTok and I'm like kind of loving it.
He dances
like a reaction channel.
No, it's not a reaction channel, man. So like, okay, so first of all, the handle is exactly the same as my X handle. It's right down here. Go follow it. I have like 30 followers. I was telling Elijah the other day, I was like, dude, this is like brutal, having 0 followers and having to climb your way up. But so the cool part about it is I'm treating it, Tanner, literally like video-based Twitter, where like the Weeble news it dropped after hours. And I was like, okay, cool, hit record. It's a 1-minute video. And I just covered the news. I was like, hey, this is what happened. This is my thoughts. That's it. And I'm finding it kind of liberating because for normal videos, I have to like make a script. I have to research the topic in depth and I have to have enough content to do like a 10-minute clip on something. Whereas for this, I can do way more frequency because it's only 1 minute. So
while you're on TikTok, say hello to this guy's 11-year-old nephew.
Well, I think what it's going to actually equal is...
Why don't you just do it on this YouTube platform?
Because, so that's what I was going to say. Like, I'm going to be able to like cross-post a lot more. And I've been doing a lot of cross-posting on YouTube.
Yeah, but why would you tell the people on YouTube to go check out your TikTok? Why don't you grow the audience on YouTube and tell them to check out your shorts here?
No. Because the form factor is so much easier for me to just record on that app. Like it has everything there. Whereas on YouTube, I have to like upload it and do the captions and all that. And like all of that is like baked into TikTok. And so inevitably I'm going to end up posting way more shorts on TikTok than I am on YouTube. And I'm just playing around right now, but I don't know. You should try it. I'm finding it kind of cool. It's like, it's super easy to make a 1-minute video without thinking about it. It's super difficult to make a 10-minute video that's value packed without thinking about it.
Yeah. TikTok is Chinese spyware and I'm going to keep it off my phone. No, yeah. I don't have a strong opinion about it. I just,
what national secrets do you have that China cares so deeply about that they don't already know about you?
I'm just, it was a joke.
You're freaking Accelera pick. And
you're the fun guy at the Comedy Cellar, aren't you? You're the guy that goes, oh, actually, no, I just like YouTube. I'm staying on YouTube.
Yeah.
I'm not leaving YouTube. I'm just saying time and a place.
And I think short form social media is toxic and terrible for humanity overall. So yeah.
Okay.
Holy.
I really do. Well, follow me anyways. Jesus Christ.
VST just because of Pelosi. That sounds good. Isn't that a potential name getting into the S&P?
No, I think you're thinking of Vive or Vert. Maybe
Mr.
I don't know.
Energy. Okay, absolutely. Thank you so much for the donation. I really do appreciate all the support, guys. Today's been crazy. This week has been crazy, but let's keep trying to find good names, and that doesn't always mean new names. A lot of the time, that means the same old names that we're talking about over and over. But we continue to reiterate, make sure that we're underwriting those positions constantly and holding if we still think that there's more to go. So, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.